Russia has started selling gold from its official reserves. About 44 tons disappeared from the central bank's reported stock in the first half of 2026. Does this mean that Vladimir Putin is running out of money for the war in Ukraine? No. But it does mean Russia has started using a financial cushion that was built to protect it from exactly this kind of pressure. The gold sale is not a signal of immediate bankruptcy, but rather a warning sign.
The Kremlin doesn't want that buffer to go down because, of course, that would lead to maybe more speculation about financial crisis or economic difficulties, and it would undermine the Kremlin's geopolitical position. It likes to portray the country as being very stable and very strong.
First, keep the sale in perspective. It was less than 2% of Russia's gold. The country still has one of the largest official gold stocks in the world. What matters is the change in direction. Russia had spent years buying gold as an insurance policy. After earlier rounds of Western sanctions, Moscow deliberately reduced its reliance on dollars and built up assets that it could control at home. Gold was central to that strategy. Now it's drawing down on that insurance. Gold matters because much of Russia's foreign money is frozen by Western sanctions, but the bars in its vaults, it can use those when tax revenue and borrowing are not enough to cover its spending. Now, bear with me because there is one financial detail we need to understand. Russia's rainy day fund holds some of its savings in gold and Chinese currency at the central bank. When the government needs money, the Bank of Russia exchanges some of those assets for rubles. The central bank then sells the same value of gold or Chinese currency on the Russian market. So don't expect to see a receipt showing 44 tons of gold buying tanks and missiles. So what does it actually tell us?
Most importantly, it tells us about the need to finance budget deficit. The fact that they're selling gold means that they're running out of other more liquid assets in that fund. So there is a pressure on the deficit and also pressure on the sources to finance this deficit.
What this fund shows us is that Russia's readily spendable portion has shrunk by roughly 3/4 since the invasion of Ukraine began. This was the reserve Moscow could tap quickly when oil income fell or the budget came under pressure. It helped the Kremlin present Russia as a country that could withstand sanctions and a long confrontation with the West. And that cushion is much smaller than it was 4 years ago, and rebuilding it in wartime conditions is extremely difficult. The fund itself is actually bigger overall, but much of that is already tied up in projects, bank deposits. Basically, it can't just be converted into cash. And Russia has a growing bill to pay. The federal budget deficit widened sharply in the first half of this year. It was already larger than the government had originally planned for the entire year. The direction is clear. Spending is rising faster than revenue. The war is, of course, a major reason. Russia is devoting a huge share of its economy to paying the military, paying for soldiers, ammo, factories, compensation for casualties, and the replacement of equipment, all difficult for the Kremlin to cut while the fighting continues. So where is the limit on paying that bill?
The real limit comes from Russia's ability to sell its natural resources, oil and gas, to the international markets, because everything hinges on that. When the oil price is high, Russia gets revenues, it's easier to borrow, its domestic financial system is more healthy. If the oil price drops, say, to 60 or 40, then you immediately have a crisis.
At the same time, oil and gas revenue has become less reliable. Higher oil prices can still give Moscow a sudden windfall, as they did during the conflict in the Middle East, but that cuts both ways. A fall in oil income can open up a hole in the budget just as quickly. None of this means the Russian economy is about to collapse. It is still growing, just slowly. Unemployment is extremely low, factories are still producing weapons, but that apparent strength hides a different problem. If everyone is working, then finding another engineer, welder, or driver becomes harder and more expensive. Russia is short of workers, borrowing is expensive, and wages are rising faster than productivity. The economy is being pushed hard to serve the war, meaning less spare capacity for everything else.
There really are two economies in Russia. There's the economy that's dominated by the state sector, and is being driven largely by military spending, military industrial industries. And the spin-off from that, the rest of the economy is a disaster. small, medium-sized enterprises, the private sector, all struggling badly.
The government could borrow more inside of Russia. It could raise taxes, it could cut projects and accept higher inflation, but none of that removes the overall cost. More government borrowing means less money for private companies, higher prices squeeze households, workers and investment are pulled towards defense factories and away from civilian industry. Roads, hospitals and schools and tech can all lose out. The war can continue, but only if the rest of the economy shoulders the burden. That's why you can't count the economic cost in mere bars of gold or piles of cash, rather in people and machines. The government can create more rubles, but it cannot instantly create engineers, machine tools, or imported electronics. So what does this mean for Ukraine? Russia occupies a large part of the southeast of the country and the fighting is still ongoing. The gold sale isn't a sign that Russia is about to stop fighting, as it can keep asking the rest of its economy to take on that burden. Waiting for economic collapse is not a strategy for ending the war. But the financial pressure does weaken Russia's choices. Over time, that thinner cushion makes Russia more vulnerable. Another fall in oil revenue would hurt more. A banking sector problem, new sanctions, or an unexpected rise in war spending would all be harder to absorb. None of these guarantee a change in Kremlin policy, but they can reinforce one another, forcing harsher trade-offs between the military, households, and the rest of the economy. So how much runway do you think Russia has left economically before it becomes too much of a strain and before it becomes a massive issue for Putin to decide whether he continues the war or not?
The issue here is allocation of resources. The question is how much pressure you want to use on the society, how much oppression you want to use on the society, because you cannot give them money anymore. But of course, Putin can continue going for years in the current environment.
The 44 tons of gold are best understood as another flashing warning light on Putin's economic dashboard. The Kremlin can probably keep the war machine running, but the price it pays in return is a bigger burden on ordinary Russian families, businesses, and the country's economic future.